Hello and welcome to the next in series of World of Commodities. Today we are talking about the all-important gold. We as Indians love to hoard gold. The World Gold Council estimates that 22,000 tons of gold is in private hands across the country, stashed away in cupboards, safes, temple walls, collectively worth over half the size of the Indian economy. The Modi government has come out with reforms which are expected to kickstart this year. If done well and picks up well, will change the way India handles gold. There are incentives for people to keep gold in banks, and there is a sovereign gold bond. Let's discuss all of that and more in detail. Joining us on the show are Samir Shah, MD, NCDEX. Rajesh Khosla, MD, MMTC PAMP. Somsundaram PR is MD, World Gold Council. Rajan Punjwani is ED, Edelweiss Group. Samir, hi, let's start with you. And the monetization of gold is something that hasn't worked for India in many decades, but the government has come out with much more. What changes do you see coming in this time around?
It's extremely important, and so far it's been sort of drifting on its own through lack of direction, either through importing of gold or through non-standardized recycled gold in India or through smuggled gold. All of these three components producing a fairly non-organized industry in something which is extremely important. So what the government has done is to really start to give some policy direction, some long-term policy direction to organize an industry which is an extremely important part of the Indian economy.
So do you see monetization schemes attract participation and good money this time?
Well, first let me talk about the monetization scheme. We have always been saying that instead of looking at supply curbs, I think we should look at getting part of the gold requirement through monetization, so that people who want to actually earn interest should be allowed to do so. So that's a very good move. The other good thing about the scheme is that we have had a scheme running for the last 15 years, and this is going to substitute that scheme. So which means there is a new thought coming. It's not a fresh idea, but it is actually a refreshed proposition. So it has greater chances of success. It is going to be more retail-centric. So that is very good.
So in past, these schemes have not worked. What will be different this time around? How do you see it working?
Yes, as I mentioned, if it was a new idea, I would be far less hopeful, because this is an idea which had been tested and it is now coming in a new form. I guess it will take care of all that has not worked in the past. So there is a greater chance of success in the new scheme. So I'm very bullish about it.
Rajan, even as there have been paper gold and gold deposit schemes in system earlier, they haven't worked. What would you say? Why haven't they worked, and what will make it tick this time?
I think the fact that there's been a fresh announcement, it makes us believe that maybe this time the details will be different, and we are still awaiting to see what the fine print on this is. But a few things, I think, if they can get done, it might be a lot more successful than the last time around. The first is, I think, just getting the banks to be incentivized to actually go and collect deposits in gold. Maybe by giving them a break on CRR, SLR, things like that. The second is to reduce the actual amount that people can go and deposit, because ideally, if it can be as low as a few grams, 5, 10 grams, then it incentivizes a lot of smaller deposit holders to go out and make use of this, thereby broad-basing this to a level where it can make a significant impact. I think the earlier schemes were largely driven towards wholesale holders of gold or the very high net worth individuals, which didn't necessarily take off as planned.
Mr. Khosla, the latest information from the ministry says that they are replacing the existing gold deposit schemes, and the new ones, of course, have been introduced. How are they different? How are they better than the previous ones?
We did a survey last year as to why the gold deposit scheme did not succeed. We figured that the initial volume of the deposit was too high. It was 500 grams. We figured that there was too much of a time interval between a customer giving its gold and receiving the assay. So we proposed to shorten this period. We said that you should be able to do an assay within half an hour. The customer should have a credit into its account, and therefore the customer should have an add-on metal account with its existing banking account. We're hoping that some of these suggestions will ultimately be incorporated.
Rujan, even as there are a lot of big incentives on gold schemes, the charm of holding gold in hand has always been high in India.
I think there are two things to look at in that. One is, of course, the charm of holding gold through jewelry. And somehow we have to crack that conundrum, because most people get attached to their jewelry, and if they deposit it, they want it back in the same form. And I don't think there are a lot of creative answers that have come up around that. But more significantly, if you see the consumption of gold in India over the last few years, increasingly there is a larger and larger fraction going towards investment products. And those could be held in terms of bars, coins, things like that. Now those are more easily channelized and more freely converted. So if we can at least target that to begin with, I think it will make a not so insubstantial difference. And it will kickstart this program, allowing others to see how it works, and maybe over the years kind of get it better fine-tuned and see how it can be rolled out to a much larger audience.
So this is one more sector that got its due from the budget this time around. So monetization of gold is something that the industry has been looking for and has gotten a thumbs up as well. But how will it work, and whether the returns are good enough and whether the industry is ready is what we will talk after this short break. Welcome back, and we're talking about the monetization in gold in the Indian markets. Whether the refining system is up to it is what we are going to ask our experts now. Samir, as an exchange, you did come out with that idea of gold hedge, the volumes and the market participation. How has that been, and what's the kind of growth that you are expecting now going forward into this sector?
I'd say yes and no. I mean, we do have a fair amount of refining capacity in India. So on paper, we have an installed capacity of about 850 tons cut across 17 to 20 refiners. And each of those refiners are at various stages of development, readiness, and so on and so forth. But on paper, we have 850 tons of refining capacity in India. We have 17 to 20 refiners. What is required is that these refiners need to get a platform like the LBMA, an Indian standard for a good refining of 99.5% pure gold. We need to develop our own standard. We need to give these refiners a certain standard to aspire to, and then these refiners, I'm sure, will respond. NCDEX is also going to launch, as you know, a Make in India gold contract, and that will further enhance the ability of these refiners to participate in an organized market and to have a marketable venue for Make in India gold.
Rujan, when it comes to investing in paper gold or making it a part of your portfolio or diversifying into it, we perhaps are talking about a younger generation. The investment sector is higher from their side. Do you see enough awareness then into that area?
Awareness is one thing. I think today anyway, if you see out of the 800 to 1,000 tons of demand that we see in India, our belief is, and our whatever research we've done, almost around 15% or thereabouts is investment demand. So if you can channelize that into some sort of a bond structure or sovereign structure which has been proposed, I think you're immediately, even if you can do 10%, I think that's a fair amount of decrease in the actual import of gold that you will effect, I think, over the next few years.
Rujan, when we talk about India refining capacity, it needs to have lots of calculation in it. What kind of growth are we expecting? Are you looking at? What kind of number crunching have you done for this?
Currently, whatever numbers are available are all informal and not backed up by any formal data. But we think that we could see at least about anywhere between 250 to 500 tons a year coming out from what is our current I think by some measures, about 20 to 25,000 tons of gold that lie with the households. We think that even if you can get 1 to 2% of that out, that's anywhere between 200 to 500 tons. And that's a significant impact because our overall consumption is today between 800 to 1,000 tons a year. So it's not insignificant. It can happen. Some of it is already happening, but it's happening in the informal sector. We think as more formal and world quality, high quality, world class refineries like ours come on stream, I think it will just make it happen even more seamlessly.
So will the latest government move give the much needed push for India refining system?
Yes, I think that is depending on how it is executed. Because if they are going to do it I mean, details are not available. Let me put it, which which refinery is going to mint it, etc. But I think it would definitely drive modernization of refinery and perhaps more refineries looking at international standards like LBMA.
Rajan, it always has been said, and as you pointed out as well, the sector lacks organization, institutionalization, and a perfect format to it. What do you see pushing it for that?
I think it's largely a function of time, if I would say. I think the government is doing its bit by, if you see even the announcements in the budget and things like that. I think it's about getting a few more institutional participants into this market and making sure that it goes away. I think that will also change the perception of this business.
Mr. Khosla, how does MMTC PAMP look to capitalize on this latest scheme that the government has come out with?
Well, there again, the idea, I think, flows from, the concept of the Canadian maple leaf or the South African Kruger Rand or the Australian kangaroo or the Austrian Philharmonic. Every country has a coin that is associated with it. India, unfortunately, does not. So I think it's a great idea to have an India coin. There's talk about the Ashoka Chakra emblem being put on the coin, which, of course, symbolizes India. The issue really is how will its manufacture be licensed? How do you evaluate quality and consistency across different manufacturers? And the key to it really is what kind of anti-counterfeiting technology will you put in the coin? Because for sure you will see a lot of counterfeit coins coming up. So you really need to incorporate the right technology to distinguish between the genuine and the counterfeit.
Mr. Khosla, what kind of growth do you see coming in here? I mean, if we are working with 20 tons right now, do you see it getting to 200 tons then in the coming couple of years?
Prior to our coming on the scene, refining in India was conditioned around refining scrap that the jewelers would deliver, and therefore was never seen as an organized business activity. We've transformed that scene, and now refining is seen as an organized manufacturing activity, generating economic benefit for the country, because now the entire value add is generated in India, as distinct from being generated by an overseas refiner. Currently, of course, there is us. There are two other refineries that have come up. I think they've seen what we've achieved, and they will certainly aspire to go towards international accreditation. But from a longer-term perspective, this country has scope for at least 4 internationally accredited refiners, and between the 4 of them, they should be well equipped to refine the entire requirement of gold in India.
Well, the markets are still waiting for the final print coming in from the government about the licensing part of it, and of course credibility and how much and who will really go in for refining. But with that, let's go for a short break. When we come back, we will talk about the Make in India part in the gold sector. Welcome back, and the Indian markets are gearing up for the Make in India gold coin. Until time, we have been importing LBMA certified gold, but this is the time that India can start shining. Let's our guests' views onto that. Samir, the major one really has been the Make in India theme that has made its inroads into the gold sector as well, the Make in India gold coin. But how well do you see the Indian refining system then equipped for it?
So basically, if you look at the physical trade of gold between jewelers and just the sort of the wholesale trade of gold in physical capacity, it's about 3.5 lakh crores per annum. That entire physical trade, happens informally on the phone. So firstly, it happens informally on the phone. Secondly, it happens through a fairly disintermediated or fairly intermediated rather, distribution structure from bullion dealers to banks to wholesalers to the retail jeweler, and through a fair amount of price opacity. So the premium that is charged in these physical market transactions for gold in India over and above the imported gold price is a fairly black box kind of a premium. So what we are attempting to do is we are attempting to offer a national platform for trading physical gold in the form of a forwards contract, and we are very thankful and grateful to the Forward Markets Commission to give us the approval for that contract. And that contract is going to be called as a Gold Now contract. So it's basically a forward contract under the banner of Gold Now, where on a T+2 basis, any retail jeweler can buy gold physically through a very transparent national electronic platform and through a pricing mechanism which is going to be very transparently discovered. At the same time, we are going to be introducing a new polled price for Indian gold premium, which has never been the case. India has never made transparent the premium that trades physically in a very opaque manner. So as a component of a national electronic platform for gold forwards through Gold Now and a polled premium mechanism, we are going to introduce a significant amount of price transparency and thereby organize this whole Make in India industry through this effort.
So the gold coins will be made in India and will cut dependence on imports. So how much of an import cut are we really talking about here?
Well, as I said, all of this will balance the imports. It would because the demand will continue to keep rising with improvement in the GDP. We have seen that happen in the last 10 years, and it will happen in the next 10 years as well, because there are enough people who will become new savers in the economy, and they will certainly drive the demand for gold. So to have an increase in recycling will balance out the imports, certainly. And a standard gold coin is a good way to give the customer value, at the same time enhance recycling. So it's a very, very good move. In fact, I would rate it much higher than the gold bond itself.
Rajan, repeating the same question to you. The Make in India has made its debut in the gold coin system. Are we ready with the refining part of it? Where is Edelweiss when it comes to the refining sector?
I think the Indian refining system has gotten stronger. We ourselves have put up a very high quality, state-of-the-art, world-class refinery which has gone on stream only recently with a fairly large capacity. So I think there is enough now refining capacity in the organized sector to take care of quite a bit of this. If we can, and we are also in the process of setting up collection centers and some sort of a formal system where people can come out and recycle. Anyway, recycling happens in this country. It just happens in a very informal manner, and people are not really sure as to the kind of quality they give and they get back. If we can do that through a more institutionalized, formal, structured refining system, which has a stamp of quality and a certain reliability to it, our belief is that you can get a lot more of that passive gold, so to speak, to come out into the system, and over the next 5 to 10 years significantly reduce our dependence on imports, and thereby also positively affecting our current account deficit and whatever impact it has.
Mr. Khosla, what's your sense on the kind of investments India needs to put this through to get more refining capacity here, to get more credible refining capacity in India?
There is a global standard for refining, and that's called the London Bullion Market Association. So far, India did not have any accredited refinery. We are the first and the only one that is accredited by the LBMA. And surely the initiatives that the government is now showing, be it the gold monetization or the India coin, must encourage more refineries in India to aspire to be LBMA accredited. And that is the only way one will be able to demonstrate transparency and assurance in the refining process.
Samir, would you say that the Make in India gold will actually cut the dependence on imports? We will see perhaps more recycled gold then coming in for the Indian markets?
Absolutely. I think we need to first create India good delivery refining standards, as I talked about earlier. Then those standards not just need to be created, they need to be acceptable, they need to be accepted. Banks need to start buying into that standard. Banks need to say that if I'm going to, I'm going to accept gold for the purpose of gold monetization scheme, maybe they should say I'll give a better interest rate to those, to that gold that comes from those refiners that meet a certain standard. So by offering an incentive to refiners to say that the gold that comes out of refiners that have a certain world-class standard, the banks will offer a higher interest rate. As an example, is one way of cascading Indian standards into the industry and making them more available. So a lot of work will need to be done. Government will need to, through BIS and through multiple other fora, they'll need to propagate the use of good delivery standards as far as India is concerned. We need to create an LBMA equivalent in India, which is world class. I mean, it doesn't, just because it's Make in India, it doesn't need to be substandard. It needs to be world class, and we need to get our refiners to build world class standards for the refining.
Samir, the government is quite keen on making some major differences into this sector. How would you say that they should implement it?
Yeah, I think they have. I mean, this a lot of this happens through trial and error, right? There is, what is most important is to figure out whether the direction is correct. And I think this time there is at least a start of a comprehensive direction. So what the government has done this time is they have introduced three main pillars to their policy. One is the gold monetization scheme, the second is the sovereign gold bond, and the third is the minted gold coins carrying the Ashok Chakra on the back of back of these coins. So these three components, in an integrated fashion, and plus we can't be looking at only the gold policy in isolation. We have to also look at the black money, the two bills that the government intends to launch for stashing of black money overseas, as well as Benami transactions in India. All that, if you put together and you see that comprehensively, one does get the feeling that there is a fair amount of strategic thought, which I think will certainly change the way gold is consumed, both for physical consumption as well as for financial savings. Both those, I think, will go through a major change through these three very specific interventions, and two indirect interventions through the sort of the black money and the Benami transactions, sort of policy direction that the government has introduced through the finance bill.
All right, gentlemen, thank you so much for being part of that lively and informative discussion about gold as an industry, and of course, what all and where all are we headed into that sector. With that, it's a complete thumbs up coming in for the sector, and markets are looking forward, of course, for the fine print coming in from the government. With that, that's the end of discussion. Thank you so much for watching.